The Tether premium in Asia-based futures markets indicates traders are still calm, even though several of the top 80 cryptocurrencies have fallen by 15% or more in the last week. Since mid-August, when they were unable to overcome the resistance of the $1.2 trillion market capitalization, cryptocurrencies have been in a negative trend. The 3-month-old climbing trend has not been broken, despite the current bear trend and a painful 25% drop. The overall capitalization of the cryptocurrency markets decreased 7.2% to $920 billion in the 7 days before September 21st. Prior to the Federal Open Markets Committee meeting, where it was decided to raise the interest rate by 0.75%, investors wanted to be safe. The Monetary Authority wants to reduce inflationary pressure while increasing the burden on consumer debt and business debt by raising the cost of borrowing money. This explains why investors turned away from risky assets, including stock markets, international money, commodities, and cryptocurrencies. For instance, the MSCI China stock market index fell 5.1% and WTI oil prices fell 6.8% since September 14th. During the 7-day time frame, Ether, ETH, also had a 17.3% retrace, and several altcoins fared much worse. Some distorted statistics among the lowest weekly performers were brought on by the Ethereum network merge and its following effects on other GPU mineable currencies. Following 2 successful fan token launches by the Brazilian soccer team Vasco and the MIBR esports squad, Chile's CHZ gained 21.5%. After Ripple Labs demanded that a federal judge decide right now if the company's XRP token sales broke American securities laws, XRP rose 16.6%. As the community anticipates the beginning of the staking scheme, which Horizon Labs will outline on September 22nd, ApeCoin, APE, gained 15%. Investors recognized the hash rate increases from Ethereum miners did not always translate into increased adoption, and Ravencoin, RVN, and Ethereum Classic, ETC, retraced the majority of their gains from the previous week. A reliable indicator of demand from China-based retail cryptocurrency traders is the OKX Tether, USDT, premium. It calculates the difference between peer-to-peer exchanges conducted in China and the U.S. currency. Excessive demand for purchases tends to push the indication over fair value at 100%, and in bearish markets, a glut of Tether's market offer results in a discount of 4% or more. At 100.7% right now, the Tether premium is at its largest level since June 15th. The indicator demonstrated a slight improvement over the previous week, even though it was remained below the neutral range. This information should be seen as a triumph in light of the 7.2% decline in cryptocurrency markets. Inverse swaps and perpetual contracts both feature an embedded rate that is typically charged every 8 hours. This charge is used by exchanges to prevent exchange risk imbalances. A higher demand for leverage by longs, buyers, is indicated by a positive funding rate. The financing rate turns negative when shorts, sellers, need more leverage, which is the exact reverse of the position described above. Every alternative coin's cumulative 7-day financing rate was negative. Although it might be discounted in the case of Ether because investors looking for the free fork coins during the merge likely acquired ETH and sold futures contracts to hedge the position, this data implies an excessive demand for shorts, sellers. More crucially, despite a week of price declines and possibly negative Fed news, Bitcoin's financing rate remained marginally positive. Investors typically refrain from making additional wagers now that this important choice has been taken until fresh information about how the economy is changing becomes available. Overall, there are no signs of stress in the Tether premium and futures funding rate, which is encouraging given how poorly the crypto markets have done.